Okay, good morning, everyone. Again, thank you for being here today. Obviously, I wanted to do something. The last few weeks we've kind of been doing an awful lot of trending work and trending discussion. I continue to get questions about that, so we can really take this today anywhere you want to go, but. So it's kind of that open session where you guys can ask your questions, um, and we'll try to focus on getting some of those answers for you. Now, I've got a question already from someone. It has nothing to do with trends, but um, let me take care of that. The question was, and I'm gonna like switch to this chart and then dive that down so you can kind of see the full chart. The question was, how do you tab multiple charts together? How do you get multiple charts to lay over one another? So I'm going to actually stretch this over here, just make this one big window so you guys can see this. So let's say I want a different chart, but I want to have access to it all the time where I can just move through those charts really, really quickly. So let's say I want my 3-line moving average chart on here. All you have to do is click on charts and find it. I named that one ringer because I think it's just a ringer to easily find good potential trades. And I got it saved with a purple background. I've changed that to a black background. But so there's my chart, okay? And if I want to layer it with this one, all I have to do, see this little button right here? It says Move Window. If I click that, look right here where it says Tab Here. That's all I got to do, tab it here. And now that chart lays right here. The one right beside it is the one that we set up as the class demo. And you can have multiple charts there. So I can move through charts very quickly. And once you have 2 charts up here, see this little paper icon right here? I can click on that now and say, I want a chart, I want scan, I want something else up here, and I can just layer them across here all the way across. Let's say I want another chart. I want my naked chart. Whoops. I want a symbol. I want my chart. I want a naked chart with the volatility stop. And notice that dropped right in here. So now I have 3 charts across the top that I can easily switch to back and forth. If I wanted my ribbon study, just go to charts, ribbon study. There we go. I have the ribbon study chart now. So all of these charts can lay just right over the top of each other. And I could also have the same chart just in different time frames. So for example, if you wanted, the volatility stop, the naked chart with a volatility stop, and you want that to be a daily, an hourly, a 4-hour, you could have all of the same chart, but just different time frames laid across there. Okay. So it makes it very, very easy to customize TC2000 to work just exactly the way you want it to work. Okay. Robert, yes, on the members page, you log into the website, go to the members page. Okay, click on the members page. Scroll down. There's all kinds of information there on the members page. It's under e-learning archives. If you guys, new folks aren't going there, by the way, I highly recommend you log into the website and stay logged in every day, all day. That's what I do. I log into the website, and I just minimize this window, and then the website is always available to me all day long. Anything I want. So you just go to, I'm not even logged in here yet this morning. So when you log in, you guys won't see what you're about to see. This is the backside of the website. You've got to be an administrator to get to the backside of the website. Come over here, click the Right Way Options tab. Okay. Right here is where you'll always find your monthly access code to the room, to the trading room. Remember, your password for the website never changes. The password for the room changes every month. Log into the website, come right here. You'll always have your password. Okay. I'm going to be working on that this weekend, trying to fix a lot of those broken links. It was a change with the company that hosts all of that data. They made some change and it screwed up a whole bunch of the links. So I'm going to be working on that some this weekend, trying to fix a lot of those broken links that might be in there. I don't know how much I'll get done, but I'll do as much as I can. It takes quite a while because not only do I have to go find out why the link is broke, I have to find it in the service that stores it. Then I have to create the link. Then I have to find the post on the website. And you'd think that'd be easy to do. It's not. From the back side of the website, that's the only place I can make changes. You have to go to the back side of the website and then find that specific post. And as you guys know, there's probably tens of thousands of posts. And I've got to find the exact right one and fix the problem. So everyone needs to remember that the first of every month, this will happen in February, log into the website. Okay, right here's your password. By the way, if you've never been to this page, we didn't put this stuff up here for our health. We put this stuff up here to give you the information that you need. Okay. And right here, there's a full overview video. By the way, every morning, email that goes out from me has a longer version of this overview attached to every morning email that goes out. Every one of them has an overview video of the service. Okay. Watch those videos and it'll explain all of these different things. But e-learning archive right here. Just click that button right there. Takes you right over to the e-learning archive. Give it a second here. Website's slow this morning. And all you gotta do is click the button. Okay? Button will take you. What I'm starting to do is save everything over onto YouTube rather than this other service, because they keep making adjustments and changes and then our links break and it's a pain to fix them. So everything is going over there. So you just click here. So anything that's a members e-learning will be located right there. If it's a public e-learning session, it's always going to be on the YouTube channel. Always. RZ, I'm not sure. I'm not sure where they have posted that or if it's available yet. I'll try to find out what he's doing with those. Yeah, and there's always an email that goes out reminding everybody of the monthly password change. But if you just come to the website and log in, every month we spend quite a bit of time at the beginning of the month because people complain, can't log into the website. Well, can't log into the room. You guys have blocked me from the room. Well, no, we haven't. The web password changed. Log into the website. Use all the information that's here. And by the way, there's tons and tons of information on the website. Lots and lots of videos, lots of things that you can access and learn from. Okay. So recommend that as well. By the way, if you've not done this, see this little bell icon on every page? That little bell, if you're using Firefox or Chrome, and I highly recommend Chrome, if you use Chrome for your browser, this will not work with any of the Microsoft products. Okay. If you click that bell icon right there, it will subscribe you to notifications. Okay. So what that means is every time I post a video, every time I post anything on a blog, if you're on your computer, it will automatically pop up this little, 1 by 2 inch, something like that, little pop-up message down in the bottom right of your main screen. It'll just pop up there and say, hey, there's a new, whatever. Morning Market Prep has been posted. It will pop right up on your screen. You're automatically and instantly notified every time Rick and I post something to the website. Okay? You might want to do that if you've not done that. And by the way, all of that stuff is described in the overview videos. Okay? No, they're not, Francis. There's the app notifications are not stored on the website. They're stored in your app. Just turn on your app. Unless you've deleted them, they're stored in your app. Okay, let me go back up here. I got to catch up with some of you guys. Hold on, give me a second here, guys. I got to catch up with some of the questions. Peterson's looking for a spare bedroom and a bus ticket in Texas. Okay, please show how you use different chart setup and scans that you use efficiently and effectively. Thank you. How do I use different chart setups and scans efficiently? Well, let me go back to my normal setup that you guys see. Okay, so what I'm looking for, you guys know how I've lined up charts across the top of the screen. So I can quickly click on what I call my T-line chart. That's my moving average chart. Okay. So I can look quickly at my T-line chart. I can look quickly at the new trending indicator. I can look quickly at my volatility stop. And anything else, if I want to look at the 3-line moving average chart, it all stays the same. Okay. If I want it to be Heikin Ashi, I can look at that real quick. Okay. Now, the method that I use, and you guys, I think you guys all know this, is this right here. Okay. What I use is a watch list. Okay. Now, this is starting to change just a little bit with the new scanner, because the new scanner does a lot of this work for me automatically. Okay. But I've done this for so long, it's likely that I'm going to continue using this method for a while. But I'll be using the scanner to add watch list stocks. Okay. So I don't do what most people do. I don't spend my day running scans, looking for new charts or things popping today. So when you're talking about efficiency, this is the most efficient way I know in trading, is create a good watch list of qualified stocks. And if you don't know what I mean by that, there's several videos on the YouTube channel on what I mean by building a qualified watch list. Okay? These are stocks that fit you for price. They fit you for volume. They fit you. We know these stocks here come from the CBOE list. So we know these stocks have a very high probability of really good options listed in them. Okay? I don't run a whole bunch of individual scans all the time. Okay. Now with a new scanner, that's just going to automatically generate things that will probably, if I look at it, I will put it in my list. I'll mark up the chart and put it in my list. But I'm not one that runs lots and lots of scans. For me, efficiency, let me ask you this question. How many of you guys have learned that if you have a list of stocks, do you need to trade everything in the market to be successful? Do you need to chase every stock symbol out there that's moving to be successful at trading? How many of you guys have seen that Bob C? I mean, if a day goes by where he's not saying something about BABA, then there's something really wrong with the market or something really wrong with BABA. Do you guys, if you remember, Bob C, I think it was in 2016 or 2017, I can't remember for sure, made $130,000 that year trading BABA, just BABA, only BABA. He traded other things, but he traded one stock. They made $130,000. Okay. So do you have to chase everything that's popping in the market, everything that's in the news today? The answer to that is no. You do not have to. Okay. A lot of folks have mentioned, a lot of folks are following Mike Peterson, his success, because we talk about it a lot. Mike uses a handwritten list that he wrote down almost 2 years ago. It's in a notebook. Every week, he goes through that list and he looks for target stocks to pay attention to that week. He's not scanning. Mike's never ran a scan. Doesn't know how to run a scan. Doesn't want to run a scan. Why would you want to change something that's working so well? Okay. So efficiency comes down to a set of charts that fit you, that you know work, that have good setups in it. Now all you have to do is move through this list with different sorts on what you want to find. Yeah, he's a master of solitaire. Okay. So let's think about this for a second. If I'm looking for something of these stocks that are in the 3-8 trap, all I have to do is sort my list for the 3-8 trap and start looking for those stocks. Start looking through. Hertz. Does that look like a really good looking chart here on the 50-day moving average chart? No. Is it a 3-8 trap? Yes. Okay, but would I take this trade with the stock right below the 50-day moving average and the 200 just above? Probably not. As a matter of fact, if I pull this over, I can see that my immediate problem with this trade right now. What's my rule? Stock is still in a downtrend here, right? Why would I be chasing a stock that's still in a downtrend? You guys know that's not going to be me. I'm not going to be doing that. Okay. Still in a downtrend. So unless I move this over to a shorter term chart where I can find a good pattern, I'm not interested in it. Okay. So when it comes to efficiency, work from a smaller list. Work from a qualified list. Don't chase everything around. I saw that, Thomas, this morning, that the new beta 19 is out, and I don't know if that means the mobile version is about ready to come out or not. I didn't go ahead and accept the version 19 beta this morning. But I'm definitely going to be checking that out. See if that new mobile version is out. Okay. So working from that smaller list makes you much more efficient. We do not have to do trade. Well, let's take an example. Let's just take a recent example of a trade that we bought, made great money on, okay? Made 30% on in a single day. Should I be done with this chart, or should I be focused on this chart like a hawk, just waiting for the next entry into the trade? You see, if this is my setup here, we broke the downtrend and we're uptrending. Now we moved very, very far away from this uptrend really quickly, making that 30% move in one day. So what do you guys think I'm going to be waiting for? The next entry into the trade. Yeah, I'm going to wait for the consolidation. What are the two patterns? Stock moves up and it pulls back to its trend. I'm looking for an entry here. Stock moves up or consolidates over to its trend. I'm looking for an entry here. So this chart will be in my list, and I'll be focusing on this chart, just waiting for the next entry into the trade. I know that the options are good quality. So why would I want to be chasing around just anything willy-nilly that's popping up? I don't know much about it, when I could follow a chart like this and just trade it over and over and over and over. Exactly. Put it on the watch list, set alerts. And you guys know that's what I do. When I'm looking at charts like, a lot of these charts that we've talked about here in the last few days, and I've shown you guys this. This is my alert console. Look at all my alerts. If I flip over here to DDD, you guys see my alert? What about this pattern don't we understand? Stock moves up, consolidates over to trend, buyers start to step in. Guess what? I'm interested in that trade. If this would not have been Friday, yesterday, if it would have not have been Friday, I would have been buying that. I make the trade come to me, and I don't care how far the chart goes up. I don't care how long this trend lasts. I'm going to continue to watch that and wait for that next entry into the trend. Move up, pulls back to the trend. Moves up, consolidates over the trend. Moves up, consolidates over to the trend. You guys see the pattern here? It's setting up for a potential entry into the trade. I don't do a lot of buying on Friday, DC. That doesn't say I never will buy on Friday. What I tend to do is be more of a profit taker on Friday. If there's good setups, that kind of thing. I was holding so many stocks, okay, on Friday. I was a net profit taker, and I didn't want to add any additional risk into the weekend. Okay, we all know there's a specific risk to the weekend. A news event that occurs over the weekend, we wake up in the morning and the market gaps against us. So I will typically go into the weekend a little bit lighter. Fridays are paydays for me. I want to take money out of the market. I want to reduce my risk. Okay, and the other thing I want you guys to see is the consistency at which, no matter the time frame, I had MU planned as a longer term trade. I get a 30% move in one day. I'm going to take that profit. Okay. I don't worry about this going on up. If this goes on up like this continues to move up like this on Monday, am I going to worry about that? Not even a little bit, because I did my job. My job is to advance my account. I'm not going to let greed get in the way of me taking profits, making money, doing my job. Okay, so what I will do now is just wait for the next entry into the trade. Yeah, Marvel. I actually didn't trade Marvel, but I told everybody about this setup. Rick even said something about it here on Friday. He said, thanks for bringing it up. Made a bunch of money on it. Well, it pops up like that, breaks way far away from its trend. I'm going to take profit. It moves up with that much strength and breaks the. What do you think the next? Anybody think the odds of Marvel consolidating or pulling back are higher now than it moving on up? Yeah. So take your profit and wait for the next entry into the trade. Okay. Don't get, I know that feeling where you allow that, oh, it might make more money. It might make more money. Well, I want you to apply that to how many times have you had that nice winning trade like that you didn't take the profit on, and then you let it go down to a losing trade before you got out of it? Isn't that a worse feeling? Wouldn't you rather take that profit? It's a great feeling, right? Taking that profit. Just, hey, there's money here. Take it. Somebody's handing you cash. Take it. And then wait for the next entry into the trade. That's all we have to do. Me too, Mike. That kind of surprised me as well. Kind of surprised me as well. So when you're looking at these trends and you're looking at these setups, don't get yourself overly caught up in just thinking I've got to hold, I got to chase everything. You don't. There's more trades right in this list than I can possibly trade. There's no possible way I could trade all of these potential positions that are setting up here. Valero Energy. Look at that thing. That's a beautiful chart. CZR. And this is, I'm just going through the top few here. NVIDIA, Disney, WBA, LEA, SKS, Momo, XLF, XLE. Just go down this list. There's more trades than I can ever take. Okay. I don't have to be chasing the flavor of the day or whatever was in the news today. Okay. When I trade over in the paper account, when I'm demonstrating, I usually just trade it as one contract trade, just to show everybody you don't have to trade big to be successful. But that's not what I do in my personal account. I'm always trading, because I'm trading a larger account, I trade larger lot sizes. Pretty typical for me to trade somewhere between 10 and 20 contracts. Sean, I don't. You certainly could. I just follow this list. I don't overcomplicate it. Okay. If something alerts and I don't take it, for example, CTRP. A lot of folks in the service made money on CTRP. I didn't take the trade. Okay, because I just had quite a few positions on. Okay, didn't take it. And that's no problem, because now all I have to do is put another alert on the chart and wait for the next entry in the trade. Okay, I just continuously work the same list. And guys, there's an efficiency in that you cannot imagine if you're chasing around everything in the market. So the new scanner, that new scanner is just a fantastic tool. And I will be using that tool to help build this qualified list. Those new setups that are coming automatically, I don't have to search for them now. That new tool is going to be generating them for me. I'll look at the chart. Wow, that's my setup. I love that trend. I love the patterns here. Boom, it goes into my list. What's going to be really cool is here in the future, the plan is to try and make, when it pops up and says, here's a chart that fits your criteria. What Ed's trying to do is, hopefully soon, is it will also tell you that there's enough open interest in that contract to even worry about looking at it. Okay. Well, think about that, Ariel. Is there any stocks trading after hours? Is there any new data coming in? It's not going to be generating automatic. It's a live scanner, so it's generating trade. I mean, it's running in the live market. So at night, when the market's not open, there's no data, that the scanner doesn't do anything. It just sits there. It's waiting for live data. Does that make sense? Live trading alerts. That's what it's called. Live trading alerts. So it's running that stuff live. So this will bring you that efficiency that you're talking about, where the scanner can add these stocks to your list. Now, even with the scanner, that's not going to change anything for me, in the sense that just because it pops up on the scanner, I'm going to automatically buy it. It's still going to have to qualify for me for trend, for setup, for pattern, before I'm going to be interested in that trade. Okay. So I saw a question going through with so many. How do you decide? How do you decide which one are you going to take? Well, for me, it's a process of the quality of the pattern and the price of the options and things like that. If I go in and see a great pattern, but the options stink, okay, and the next one has really good quality options, well, that's a pretty simple decision for me. On CTRP, we had a beautiful setup here that I alerted everyone to. Like I said, a lot of members made money on this. I didn't take this trade. And why didn't I take this trade? Stock was still in a downtrend. Pretty simple, right? Stock was just breaking through. That was an easy decision for me. It doesn't fit my rules. Hasn't broken its downtrend yet. The pattern was good. If I went to a more of an intraday chart, I could have traded it. It would have fit the rules. But for me, there's so many stocks out there. Why should I try to make something out of a trade that doesn't fit me personally? And you guys know I'm really, really strict to my rules. It took me a long time to develop that discipline to my rules, but if it doesn't fit my rules, I'm not interested. I don't care who's trading it. I don't care if Warren Buffett himself calls me and says, man, if you don't trade this, you're out of your mind. I'm going to tell him, hey, buddy, I hope you're really successful in that trade. I really do. But it doesn't fit my rules. I'm not going to trade it. It took me a long time to develop that discipline. And the way I developed that discipline, by the way, guys, is I did the work. Okay. And what's the work I'm talking about? I did the research. Okay. And I finally learned that there are some very, very good patterns that I've become very adept at identifying. And then there's other patterns don't work as well for me. I've proved it with my trading because I recorded my trades and I've evaluated those positions. I know what works for me and what doesn't. Okay. So there's even no question in my mind. This is a business decision that I'm making. Why would I take a business decision or make a business decision when it's questionable to me because it's bumping against resistance? Not going to do that. You see, a big part of being successful in trading is not taking a whole bunch of losing trades. Right? Does that make sense? You've got to make sure that you're being disciplined to your set of rules and know why you do that. Why you stick to those rules. Why it's important to stick to those rules. So, most of the time, it's really not that difficult to sort out what I believe is the better of the trades. Now, does that mean that when I sort out what I believe is the better of the trades, that they all win? Not even close. Okay, but it fit my rules. I stuck to my plan. And I know that if I continue to trade and stick to my plan, in the long run, I win way more than I lose. I don't have to trade every day. I don't have to rush to a trade. I don't have to do any of those kind of things that so many people do. That they're panicked in the morning. The market gap up. Oh my gosh, I've got to find a trade. Hurry up. Got to find a trade. That's the last thing on my mind. Market gaps up in the morning. You know what my first thought is? Is there something I should be taking a profit on? That is the first thing on my mind. Manage my existing positions. Try to find a place where I can take some money out of the market. Adding new risk on a gap up open is about the last thing I want to do. There should be no emotion in your trading. Bob C. talked about that yesterday. He showed us a trade in BABA where he had made big bucks on. I can't remember the number. Bought it a few days ago. Was it 2,500 or something like that? Made a really nice profit on the trade. Everybody congratulated him. Awesome, Bob. And then I pointed out, well, if you bought it several days ago, at one point in time, you had a massive loss in that trade. If you made $2,500 on that trade here, at one point in time, he had a massive loss on that trade. Here's the difference. Bob C. doesn't panic about his trades. He enters the position where he likes the trade, and then he manages that position. Doesn't panic. Follows his plan. Okay. Kurt, that is actually That's actually the recording software that you're seeing. You can see it. I'm recording this, and these are the drawing tools in the recording software. Okay, where I can open up the drawing tools and draw. Okay, that's not in the TC2000 software. Okay. If you want to draw up charts and print out charts, Kirk, you can get something. It's through TechSmith. It's called Jing, 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 through TechSmith. It's free. You can download that. You can do small recordings and you can draw up charts using their drawing. They have, it's minimal, but you've got some drawing tools and things like that you can do. You can mark up the charts and do screen captures and share them or stick them on your wall. That's free. If you want to spend just a little bit more money, you can buy. It's also through TechSmith. You can buy and it's software that I use. It's called Snagit. And Snagit works really, really well. And you can highlight things and put drawings on charts and that kind of thing. So a little bit more money with Snagit, but yes, Snagit can do some recording, yes. Okay. So back to that question on efficiency and doing things. This is honestly, guys, and you've seen this. This is how I work. There's not one of the trades that we've taken here recently that's not in this list. Not one. All of the trades that I've been mentioning are in this list. Every single one. Okay. I use Camtasia, Bill. Camtasia Studio. It's unless you're doing videos a lot, it wouldn't be something I would recommend to folks, just because it costs. There's a cost to it, and they're always updating and adding more costs. So I really wouldn't recommend it if, just for the casual, if you're buying it for the drawing tools, I wouldn't do that. Okay. So that's where you're going to gain efficiency in your trading for the most part. Now, all of the questions have really gone far beyond my screen here. Could you guys, if there was a question, I want to answer them. I don't want to skip them. So let's, if you have a question, could you go ahead and put that back in? Okay. Alfred, obviously I was not stopped out. My stop loss was below. People kept asking, are you still in JD? And I said, yes, I am, barely. Okay. So I am comfortable with a looser stop than some folks are. You guys have to decide your stop loss, where you want that stop loss to be. Okay. I came within, pennies of being stopped out on JD. Didn't get stopped out. Came really, really close. Okay. Okay, Doug, a question. Say if price is above the green trend, new indicator, but the red volatility stop is above, would you consider an entry if there is a candle signal? Good question, Val. What Val is saying is we're looking at a chart that has, we're above this trending indicator. Okay. Remember, this trending indicator, guys, is not a buy-sell signal. Okay. The price action is a buy-sell signal. All right. So really the question Val is asking, would I take a trade if it's below the volatility stop? A red volatility stop. Let me go back here. You guys all, anybody that's been around for a while, should all remember this. This was a trade. By the way, I want you guys to notice, exact same pattern that we're trading right now that was happening here in 2017 on Procter & Gamble. Broke the downtrend, right? We broke this downtrend. Okay. I waited for this to move up and pull back. It moved over to trend, and I bought it right here. You can see my alert, and you guys know that I look for those pullbacks, and it's not the first pullback pop that I'm after. Because a lot of times, if that is away from the trend, that gets sold into and it moves over to the trend. So I wait. Now, it wouldn't have mattered so much if I had of, because if I had bought this here or bought this here, my stop loss still should have been underneath that price action. Okay, so it would have, this one would have held. Doesn't always do that, but this one would have held. I chose to buy it here. You guys know I like to look for those little consolidating patterns in here, and I bought it here. Was it below the red volatility stop? Yes. So why would I do that? Well, first off, it had done everything I wanted it to do, right? It had broke its downtrend. It had moved above a price resistance. It had held it as support and had moved over to its trend, and there were buyers coming into the trade. The price action was the element that made me make that trade. If a stock is going to trend, this is something everyone has to get comfortable with. Okay? If a stock is going to trend and prove a trend, okay, it will break. It must break. I won't say it will, but it must break that resistance if it's going to stay in a trend. It's the only way it can do it. Okay? Now, it took me a long time to learn this. A long time to learn this. But what I've learned is to trust the trend. Okay? Learn to trust the trend. I didn't want to draw that arrow there. Learn to trust the trend, buy the stock at or near price support and trend. Simple as that. And I have to trust that the stock, if it's going to continue to trend, will break that resistance. It must break that resistance if it's going to continue to trend. So this comes down to your confidence in the overall market. In 2018, right in here, 2018, the first part of 2018, were we confident in the market? First part of 2018. Let's see, where's first part of 2018? I got to move over. Where am I at? I'm lost. My chart here. Here we go. 2018. Were we confident in the market in the first part of 2018? So if I'm confident in the market, CJ, you weren't confident the first part of 2018? Look at this move in January. Come right off of price support and moved up. I don't know how you couldn't have been confident in the market first part of 2018. Okay, that's when that trade occurred. When I'm confident in the market, confident in the trend, and I see a trend on a chart, I'm going to be pretty confident to enter those positions. Yeah, but Jerry, there was nearly a month of incredible trading there. It wasn't until the end of January, right before February began, that we sank away. Oh, was it in June? Did I read that wrong? That could be too. Well, let's go back to June. Were we confident in the market in June of 2017? Okay. So when you do your market evaluation, you have to make those decisions as to your confidence of what's going on. Why has the last couple of weeks been so good? Why has there been such great profits made in the last couple of weeks? Well, what's the stock market done? Here's the diamonds. Broke the downtrend, moved through, pulled back, held support. Buyers stepped up in here. We started a trend right there. We moved up. What did we do? We consolidated, moved left over to the trend. Stock moved up. And now we're consolidating over toward the trend. Okay, so if the market's trending, if the market is showing us strength in those trends, I'm going to go with good quality setups and stocks and trade those trends. Does that make sense? And I know it seems like, well, that's a lot of stuff to have to put together and to think about. And it's true, it is. But it really becomes almost second nature after a period of time. Do I believe the market is looking bullish or bearish? It's looking bullish. All right. Market's looking bullish, showing good signs. I'm going to be looking for long trades and good quality setups. That's all that there is to it. Have you guys ever seen me really try to predict which direction the market's going to go? I don't do that. I wait for the market to show me. Either it's working or it's not. I wait for it to show me, and then I look for trades, trading with that market direction. Every single one of the trades that we've taken here recently have all been basically the same pattern. And in a good market condition, the majority of those trades are going to work. Not all of them are going to work, but the majority are going to work because they're going to move with the direction of the market out of that good pattern. Does that make sense, guys? Here's some questions that I've been answering lately, stuff that comes in on YouTube and things like that, is we all have confidence issues in our trading, right? Over time, we take a beating from time to time, and we have confidence issues in our trading. And when you have confidence issues in your trading, what do? Well, you start to wander. You second guess yourself. Somebody that you kind of know or respect says something about a stock, and you immediately jump to the conclusion, well, that must be a good trade. They know more than I do, and maybe I should just jump on that trade. Don't do any planning. Don't do any setup. Don't do anything like that. Okay? And then that trade loses. And your confidence continues to be eroded but we don't fix the problem. You have to fix the problem. If you continue to lose repeatedly over and over, is it the market's fault? No, we're continuing to repeat the same mistakes over and over and over and expecting a different result. We have to fix ourselves. And that's the hard part about trading. Looking at a chart, finding the trends, looking at the candle patterns and the patterns on the chart, there's a learning curve there, no doubt about it. But that's the easy part. The hard part is learning to manage yourself and the confidence in your trading and stick to a discipline. Now, my discipline, is that the only way to make money in the market? Absolutely not. There are thousands of different mousetraps built to make money in the market. This one works for me. And I keep it simple because I like the lifestyle of the trader. I don't want to have to be glued to 40 different indicators and well, honestly, you're going to find yourself if you do that, probably losing money consistently, or you'll never make a trade because you'll just be frozen. Can't make a trade. So I get these questions, people that have been around for a long time, listening to me for a long time, and I'll get questions like, well, okay, I want to trade a stock on a 30-minute chart. Is it okay for me to enter that trade on a 15-minute? Well, what do you think my answer is going to be? If you've proven that works for you, great, do it. But I've never found that to be effective. If you find a chart on a 30-minute basis, you better manage that trade on that 30-minute chart. Okay? Here's the thing. They never go through the process to prove that what they're trying to do there works. They just want somebody to tell them, yeah, go for it. That's not how trading works, guys. You've got to prove to yourself that that is effective and then stick to that set of rules. But here's the problem. They'll find out that doesn't work and then they jump to something else. And then they'll add 3 more indicators and they'll add something else in there. How many has ever done that? I did. To a point that I finally convinced myself the only way to make money in the market was to day trade. Guess what? Wrong. Absolutely wrong. The big secret in the world out there, guys, if you guys don't know this, almost all day traders lose more money for years before they ever start making money. It's one of the highest cost, lowest return methods of trading out there, period. You're never going to hear that from the broker because the broker doesn't care whether you make money or not. The broker is generating a commission. So they're going to give you all the tools and all the fancy stuff so that you can just get out there and just trade to your heart's content and lose that money. They don't care. They made their commission. It is the highest cost, lowest overall return in trading. And I had to go through the whole process and prove that to me, to myself, before I finally realized, dude, you're going the wrong direction. You're trying to get faster and faster and faster, thinking that will solve your problems. It won't solve your problems. It'll make them worse. Think about it. If you're struggling on a daily chart and you go to a 5-minute chart, is there more noise in a 5-minute chart than there is in a daily chart? Massive amount more noise. If you can't make money on a daily chart, you will lose money so fast on a 5-minute chart, it'll make your head spin. But here's the thing. What we do as traders is we bounce around so much, we never settle into one thing. And we fight ourselves. Well, I know I'm supposed to, but I think on this time I'm just going to cheat. And what happens? It's that one trade or that wins, okay? You get that trade, it wins. And it wins just enough that you think you've got it down. But when you look at your account, you're not making any money. Because when it loses big. But if you're not reviewing those trades, if you're not following through with your plan, are you getting what you deserve? My old mentor would say, you got exactly what you deserved. You broke all the rules, thought you were smarter than the market. Market proved to you you're not. You got what you deserved. So you've got to have that plan. You've got to have that discipline to stick with a set of rules. And that's why I'm so strict with what I do. I'm so careful with what I do. You guys realize I may not have to trade with what I did this month. I may not have to trade all of February. If there's no trades that I really like, I really don't have to trade them. And I don't even worry about that. I don't care. I wait for the trade. I make the trade do what I want it to do before I trade it. Discipline. You know, Bob K, you're right. We all think there's just not enough time to plan a trade and do the steps that we need to do it right. We lose the money and then we have to work double hard just to try and recover from that and fix it again. Well, and you know, Bob asked the reason that's easier for some folks than not. You know why it's easier for me to seize those times when the market is showing those signs and being bullish and everything is because I haven't taken the big losses in the downturn. You guys saw me. I slowed way down. I almost did no trading. Particularly during this period of time, I did almost no trading. Okay. It was too volatile. Even on the short side, the volatility was so strong in those daily swings. I didn't even want to be a part of it. So I protected my capital. I protected my confidence in my patterns, my abilities. I didn't get myself all beat up. And it took me years to figure that out, guys, that there are times when you just better, sit on your hands. You're better off. And we talked about that several times during the sessions. How many of you would like to have gone back and said, look, I wish I'd have made that decision back over here to just stop trading for a while? You'd be in a better position today, cash-wise, if you'd have just stopped. That's all part of doing that evaluation, that market condition. Okay? So I want to apologize if this sounds like I'm being kind of harsh, and I don't intend it to be that way. I sound this way because I really do care about you guys. I don't want people to lose money. Okay? I don't. But I'm not helping anyone if I don't tell you directly what's going on there. If you overcomplicate things, if you do all of this fancy stuff, and one of the questions I answered yesterday, someone had told this person something about you have to use a 1440 minute chart, otherwise you're losing data and you're just crazy unless you do that. And it was asking me questions. Should I just be using a 1440 chart and then looking at a 15 minute for my entries? And I'm like, are you out of your freaking mind? I have never I have never ever heard anything about a 1440 minute chart. Is that something you see any place? But somehow someone had convinced them that that's the only way to make money in the market. And then complicated by, let's throw in another time frame on here because that just really makes sense. What? You know, guys, it doesn't matter what time frame you decide to trade. If you want to be a 15-minute day trader, be a 15-minute day trader. Stop screwing around and be a 15-minute day trader. Find a few charts that are moving and monitor those charts and be a 15-minute day trader. If you want to be a swing trader, then stop screwing around and set up a plan to be a swing trader and be a swing trader. Look at what Rick has been able to produce, what we have been able to produce over this last couple of weeks in profits. We had a person that was in here brand new, first day, made $900. You saw Bob C. while I was talking, just began the class yesterday, mentioned two stocks. Bob C. bought them and made $300 and some in 23 minutes. Decide what you're going to be and then be that. Stop jumping around. Stop all of this chasing and rushing and over analyzing and doing all of this stuff. Keep it simple. We've proven over and over and over with the examples of Mike Peterson and Bob C. And by the way, Bob C. was not a winning trader before he came to Right Way Options. In fact, had lost a lot of money the first time we'd talked. That's awesome, Dan. That's awesome. Now, that's not me. I want you to understand, guys. I appreciate that comment, Dan. I really do. Makes my day, makes me get all warm and fuzzy and everything like that we're doing the right thing. But here's the truth of the matter. Why did Dan C. do that? Terry, no, he doesn't. He's a trader. He's a plumber. His full-time job is a plumber. Now think about this for a second, guys. Why did Dan D make that money? It wasn't because of me. I may have helped in pointing to some trades or something that he took or whatever, but why did he make that money? Because Dan D initiated the trade and took action by taking profits when it moved up. That's how Dan D made that money. It's that simple. The trade pattern set up, he found the trade, he followed through, he initiated the position, he took the profits. That's how he made money. Okay? Had nothing to do with me. except the fact I may have pointed out some trades, pointed out the process, pointed out those kind of things. But he followed through and stayed disciplined. Okay, that's the power of hit and run candlesticks and right way options. It's not Rick, it's not me, it's not Ed, it's not Steve. It's the fact that we get to work together as a group, utilizing everyone's experience. Okay? And applying that new information here so that we can do a better job as trading. But if you're not willing to change, I don't care how long we stand here and talk. If you're not willing to change, if you're not willing to step up, face that person in the mirror and say, look, I'm screwing this up. I've made a mess of this. I've overcomplicated it. I've tried to micromanage this. I've done all the wrong things for too long, and my account is proving that to me. I'm going to change. And if you're not willing to do that, if you're not willing to make that change, do you think keeping doing the same thing that you're doing right now is going to change anything? Repeating the same things over and over and over, expecting a different result? That's not how it works. That's not how business works anywhere. It just doesn't work that way. So we have to go through and set a set of guidelines, goals, and methods on what we're doing, a process. And you guys can see it works. One of my coaching customers, he told me I could share this. He may be here today. I'm not sure if he's here today. I won't mention his name just because one thing that happens that shouldn't happen, okay, is when, and I'm going to, give me a second on this, guys. I think this is important. When members are willing to share their results, share their trading stuff, that's not, please don't take that as something personal. That's not personal. Okay, I know there are some folks that take that personally. Well, they're making money and I'm not. You know, and the whole jealousy thing sets in. What that should do is give you hope. Okay, so here's one of those examples to give you hope. This is a trader, okay, that was struggling in his trading, has spent several months with me coaching, okay, to correct these problems. The last time we met, his results were this. He won 14 trades. He lost 11. Okay, now think about that. Win 14, lose 11. Is that a great track record? Is that an awesome track record in trading? I mean, that's a ratio of just over 50%, right? He won a little more than 50% of his trades. Okay. But here's where it really shows the difference. Here's where it really shows the difference. In these 14 trades, he made $2,500. In these 11 losing trades, he lost $300. Now, this was over the course of a month. Okay? Now, let's think about this for a second. What does this kind of track record mean? Well, first off, his account's growing, right? That's the primary goal here, is to grow your account. Is there anything in there that says he's going to get rich quick? Nope. Is he continuously trading? Is he staying busy? I'd say 25 trades over the course of a month, staying pretty busy. He's working the plan. Okay? He's staying pretty darn busy with his trading. He's not taking one trade at a time thinking that he's going to hit the big one here soon. He's trading. Okay? The other thing that you can see in this is he's letting his winners move up nicely. But when these fail, he cuts them off quick. No emotion, just get rid of them. Not doing what I want them to do, I'm out of here. Okay? That right there is critical. Okay. Now let's talk about the basics of this. If you can get to this point, okay? In fact, I would say if you are a 50-50 trader, you win about half your trades, you lose about half your trades. How do you fix that problem? Is it big changes? Oh, I need to add 14 more indicators to my charts, and I need to run around to every webinar that's out there, and I need to do this, and I need to tweak this here, and no. That's going to guarantee that you will never break out of that 50-50 trader. You know how you change this? Evaluate these trades and find out which ones you made mistakes on. Is there something that you could have improved here? Did you chase a trade? Did you buy the trade at resistance? Did you break a rule here? Some of these you're going to find, nope, everything was fine. Market just handed you lemons. Nothing you can do about those. Those are going to happen to every trader. But if you can eliminate the trades over here that were mistakes, all of a sudden, this ratio starts to improve. All of a sudden, you're a 60% win-loss trader. You're a 65% win-loss trader. That's how you make that change. It's in that hard work that you start to see your improvement. Now, I know that's not what anybody wants to hear. What everybody wants to hear is the new trend indicator is going to save me from myself. It's going to make me rich. And I'm telling you guys, it won't unless you fix those problems. And it's not massive changes that have to be made. It's small changes. It's little tiny tweaks. It's addressing that person in the mirror that says, look, you screwed this trade up. You did it again. You bought it at resistance. Stop doing that. It's you identifying where those mistakes were made and addressing them and fixing that problem and being willing to fix them. That's where success comes in trading. It doesn't come in adding a whole new indicator or using multiple time frames or all of that kind of stuff. That doesn't matter. Guys, I've shown you that the patterns in these charts repeat themselves over and over and over. It doesn't matter what time frame you choose to trade. Do you guys remember just the other day, I showed a 15-minute at the diamonds? Right over here, and I laid this trade out for you guys. The morning gap up. What do I always say about a morning gap up? wait until we see proof that buyers are supporting the gap. Did we ever get proof that buyers were supporting the gap? No, we failed right here. So there could have been an entry into that trade right there, into the short side of the trade using a 15-minute chart. If you didn't enter that trade, where was the next entry into the trade? We moved down. We consolidated over, by the way. We consolidated over to the trend. And then we failed. There's the entry into the trade. It's the same pattern. We can see the gap fill, and we could see the potential target of support right here. We can see that ahead of time. Can you make money with the exact same pattern on a 15-minute chart? The answer is yes. Now, is that any different than the patterns that I show on a daily chart? Is it any different than the patterns I show on a weekly chart, an hourly chart, a 4-hour chart? Same price pattern. Stock gaps down, gaps down. Never climbs back up over this. Sellers are supporting the gap down. We start to fall. Look at it. It's the same pattern. There's the trend. Down, over to the trend. Down, over to the trend. Down. This is when we know it's over. Broke the downtrend. Awesome, Valerie. Awesome. So can you guys see, it's all about, it's not about the volatility stop. The volatility stop is a guide to help you see support and resistance. It's not about the trending indicator. We put that trending indicator on a 50-minute. It's not about the trending indicator. The trending indicator shows us that we should be short rather than long here. Okay, we should be long rather than short here. That's all the trending indicator is doing. Okay, so what's the key here? What's the success element in here? What is it that had Rick making 360% last year? Reading the price action of the chart. Failure, continue on, move over to trend. Failure, move over to trend. Failure. Daily chart, 30-minute chart, hourly chart, doesn't matter. And every time you make a trade like this and make a mistake, you need to evaluate that and say, what did I do wrong? So that you can reinforce that rule saying, yep, I did it again. Did it again. Stop it. This was a mistake I repeated so many times it makes me want to puke. I suffered from this for so long I almost gave up trading. Here's what I would do. Stock would pull back. I'm trending. Stock would pull back. I would see buyers stepping in here, but I couldn't make this trade because there was resistance right here. And I didn't have the confidence to enter the position. So guess what happened? I waited for this to move up. Stock moved up. Then I went long. And what happened? Boom, get stopped out. I'd do it again. Stock moves up. Oh, it's breaking out. That's what I'm supposed to do. I buy this candle here. Boom, get stopped out. Over and over and over and over, I made that mistake. And it was only when I finally fessed up that I was the one screwing it up. It wasn't the market. It wasn't the market maker. It wasn't the president speaking. It wasn't something that was said on CNBC that cost me money. It was me. I was doing it over and over and over. I was repeating the same thing, expecting a different result every single time. And guess what? I didn't get a different result. I kept losing money. So you have to make that change. You have to stop all that chasing and racing and over-engineering and overthinking it. And just trade the price action of the chart. Those indicators are there to help give you clues, not to tell you when to trade it. They're there to give you clues. Okay, so we wait for the price action to bring us to the trade. We wait for the price action to bring us to the trade. You guys see me show this chart a lot, but if we go to like SQ last year, look at all the opportunities in SQ that there were to trade. Is it not the same pattern every time? Stock moves up, breaks out. Don't chase this. Don't even worry about chasing that. Wait for the stock to move over to trend and prove a trend. That's where the trend gets proved. Wait for your entry signal. Trade the trade. Moves over to trend. Trade the trade. Stock breaks down, goes below our trending indicator. Okay, we're out of trend here, right? So what do we have to do? We have to wait for confirmation of a new trend. It could have been a downtrend, but instead this bounced right back up, held support, showed you buyer stepping in here, trend. Stock breaks down, goes below our trending indicator, no trade. This pop up here, no trade, because it hasn't proven support yet. Where does it prove support? After we consolidate this and hold, and then buyers step in. Low risk entry into the trade. If you miss it there, same trade setup right there. Make that trade. Stock falls. Don't worry about this. Don't chase that. We don't know what the trend is yet. We don't know if it's going to turn around and bounce right back up here and turn green again, right? We don't know, just like it did here. So we wait. We wait for it to rally back to resistance. It fails here at resistance. Now we can take a short trade. It's the same pattern every single time, over and over and over. And it doesn't matter what time frame you choose to trade it. It's the same thing. So it's the discipline to wait for the trade. You know how many times I answer questions all the time? A stock has come up out of a bottom. Okay. Bounced around in here for a while, been trading down. Bounced around in here for a while, and then gets a massive spike up. Should I buy that today? Well, you guys know the answer to that. Has that proven a trend yet? No. Does it matter if this thing does this? Still not a trade. Unless I go to an intraday chart, I cannot trade that. I have not had a test that proves that this can hold. What if it did this the next day? We have to wait for the test. We have to wait for proof of trend, or go to an intraday time frame that gives you that setup. Okay, here's an example of that. I looked at, you guys know I've been kind of watching CGC a lot. And see this big move that happened here in CGC? Do you guys remember when I alerted everyone to this? I alerted everyone to it from an hourly chart. Do you guys see the pattern here? If you want to catch those fast movers, you've got to be willing to go to a shorter term time frame. You notice on a lot of my charts, the alerts are either the pop out of the box or that tight pullback, that little consolidating move in the trade. No, I don't think it's late on most of my alerts on those trades. Okay, now if you set up a trade and the stock is really volatile and your stop loss has to be too far away, then you just have to avoid that trade no matter how great the setup is. Remember, one of my favorite patterns is that the stock moves up. Okay? When it pulls back, you'll often get this pop right here. A bounce of some kind. Okay? But if my trend is out over here, I'm usually not going to take that first pop unless I get a follow through. Okay? What I'm going to do is usually wait for this little consolidating move right in here where we bounce around 2 or 3 days, and then I set my alert right here. You guys see me do that a lot because I'm moving over toward my trend. How many of you guys remember that Roku? Here's a great example of this. Roku, lots and lots of folks were trying to buy Roku right in here. Now, that didn't hurt anything, did it? If sometimes, if this holds in here and you buy there, your stop loss still holds, it's okay. But how many of you remember all through here, I said, I think there's still a good chance, guys, this will move over to its trend before it moves up. You guys have heard me say that over and over and over. And yet I still get the questions. The stock pops up right here. Should I buy it? Well, if you can set up the trade there, great. I want you to notice in that first pullback, if you try to set this trade up with the volatility stop right here, let me go over to here. If you try to set this trade up, sometimes the volatility stop, because of the volatility of that move, sometimes the volatility stop on that would be down here. Because of that quick move up and then quick little pullback and that pop comes in here, you try to plan that trade, you're taking a lot more risk. If that trade sets up for you, that's fine, and you can trade that trade. I'm just telling you, odds are it's either going to pull back and find its trend or move over to its trend before it really moves. So I know I don't have to rush to this trade. All I have to do on this position, and exactly what I did on that trade, was do this. This alert originally started a little bit higher. I kept tightening up this alert. Notice how many touches I get to this line right here. Touched it here and here and here and here, 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 and here. Do I have some data there? All of those touches through that area, that this, if we found bulls in here, why would I be looking for bulls? Because the stock is getting closer and closer to its trend. It's all this time held on to this price support. So I'm looking for buyers. I wait for the trade to come to me. I don't overanalyze that. I wait for the trade to come to me. When the trade occurs, I make the trade. Okay, I don't analyze it. Yeah, BBBY is on my list. BBBY, I've been talking about this for a while. There's exact pattern right there. Pop up big, look at it consolidate. And I keep saying there's a really good possibility that this could consolidate over to here. But I love the fact of this nice little tight box that's being formed in here. This has the opportunity to break this box early and change the trajectory of its trend because of that nice tight consolidation. So I set an alert and I wait for the trade. I don't even have to worry about it. Once my alert's on there, I just wait for the trade. Yeah, I bought the stock on Roku, Mike, because the options just stink. If you look for the options have very little open interest. Bid-ask spreads are really wide. It just plain not good. So I traded the stock instead. Now, oftentimes, depending on the stock, I may just choose to just pass on by and not trade it at all. I can't trade every trade signal that shows up out there. I don't even want to. So if it doesn't set up for me, if it's not right for me, if I choose not to trade it as a stock trade, I just walk away. You know, I did the same thing with Hun. Hun has terrible options in it, but I traded Hun. Just bought the stock. Yeah, if you look at those options, Mike, they had a really wide bid-ask spread. And if you look at the open interest, you guys know that my open interest, I got to see some trading in there before I'm going to buy an option. Okay, a little confused on the trend in Hun. Well, let's go here. Let's put some lines on this chart. Okay. Now you can see originally I put this trend through here. All right. That's proven that the trend here has flattened out, right? It didn't make its run here where I'd originally drawn that line. Okay, so if this were to follow through on Monday and pop on up a little bit here, then the new trend support area is right over here. So that means I have to move my trend line. There's my new trend line. That's where we found support. That's where buyers came in. The longer this goes out, the more defined this trend becomes. On the initial trend, you have to adjust. If it has to consolidate more, it has to consolidate more. Yeah, I knew they were going to be adding that stuff into the new version, so that's cool. I'll be playing with that here soon. One thing I also catch a lot of questions on, guys, is, well, I don't understand why you set that line there. Please understand that you don't have to draw your chart up exactly the way I have it. You need to draw your chart up the way you see it. Okay, the way that helps you bring attention to a trade. I've told you the reason I do what I do is because I want to get as many touches to a trend line as I can, okay, along those trend lines. Does that mean I set every line or do everything perfectly every time? No. Okay, all I'm trying to do is give myself a good reference that something has changed here. Would you agree when Hun broke through this downtrend, consolidated over, and then we had buyers stepping in right off of that trend, that something had changed here. That's all I'm looking for. Something had changed. Does that mean I buy it there? No, I didn't buy it there. I wanted more proof of trend. That's all. So I waited for the break of this resistance. Watch for this trade. Moved up pretty sharply. Wait for the next entry into the trade. That's all I did. Nothing that spectacular. I can't tell you if this will turn out to be a winning trade or a losing trade. Right now, I'm winning on the trade. Could this easily turn into a loser? Yes, it can. Okay. I don't know if it's going to win or lose. I just know that the pattern is a productive pattern. We've traded this pattern a ton over the last couple of weeks, and well, you've seen the results. We're making money, right? So I just do the same thing over and over and over. Okay. The way you build confidence in drawing your trend lines is just keep doing it. You can't draw up one or two charts and think, okay, now I got this. It's not the way it works. Just like everything else, it's the amount of effort that you put into the trade. It's the amount of work that you put into the position. This is your money. Isn't it worth putting the effort in? Did anybody ever tell you this should be easy, that you should just automatically click and make money? No. Not in anything you've ever done has it ever been that way. Linda, you're right. Even if you add the trendicator on there, I guess trendicator is actually a copyrighted name. So maybe we call it the Trendinator. It's the Trendinator. The Rickometer. There you go. But all we're looking for is the same thing over and over and over. We're looking for those trades. But notice what Linda said. When you put even one indicator over that naked chart, it makes it a lot harder to draw your trend lines. Get naked. Even if you use the volatility stop chart, I love the volatility stop. You guys know I do. But when you're drawing up your lines, you're going to find it easier to shut off the volatility stop on one chart, have a naked chart to make your drawings on. Clean it up so you can see that price action. What is the most important thing in trading? What is the most important thing to entering a trade and exiting a trade? Price. That's right, Alan. Price action. Price is the most important thing. Price is king. If you're not recognizing and following price action, if you're only following a whole bunch of indicators that will oftentimes give you contradictory signals, right? You're not following the price action. You're making a big mistake. All of your buy-sell signals are based on price action. Okay? Follow price. Follow price. That's all you got to do. Yeah, see, Alfred, I think that's a good point. If you're trading with scared money, always afraid, in your trading. First off, what I would tell you is that you don't have confidence in your plan. Okay? And if you don't have confidence in your plan, it's because you've been making, most likely, it's because you've been making repetitive mistakes in your trading. Okay? And that's going to always keep you scared in a trade. There's also people out there that just don't have the tolerance for trading. Okay? I worked with a woman for a long time. She's actually a personal friend. I've known her my whole life. As a matter of fact, she's kind of like a second mother to me. She wanted to trade. She had the desire. But she finally realized, I said to her, okay, we've got to define what's too much risk for you. And she goes, well, $25. And I said, well, you couldn't lose $100 and be okay with, oh, no, I couldn't. No way. That's way too much money. I said, well, I don't think trading's for you. Because there's not one business model out there that I've ever seen that you can be in business and not have a tolerance for risk. Okay, when I was building houses, I would often have $200,000 or $300,000 in lumber bills before I ever got paid from the job. That's risk. Lots of risk. You're counting on somebody following through on their contract. Yeah, and this is something I say quite a bit, and I know Rick talks about paper trading. He doesn't like paper trading at all, and for what he's talking about, he's exactly right. If you think paper trading is the same as live trading, it's not. But if you practice paper trading and hold the discipline of what you're supposed to do, what I want people to paper trade for is to build confidence in the pattern and the trade. If you can paper trade and see that confidence starts to go, well, I see the pattern, I can make the trade. Now we can adjust over to live trading. We still have to deal with the risk tolerance thing and the emotion of live trading. But you get the mechanics down. You see this pattern, you make the trade. You see this pattern, you make the trade. Mike will tell you that he paper trades a ton. When he's trying to learn a new strategy, he paper trades it a ton. And it's not that he's trying to make money on the paper trading. Okay? What he's trying to do is go through the mechanics of making that trade over and over and over and proving to himself that this works, building that confidence that he can pull the trigger on a trade in the live account and make that position occur. Okay? That it's the repetitive nature of doing it over and over and over. You guys see that what I do is pretty much identical every time. It's the same trade, same pattern, same thing every time. Okay? It's that repetitive nature. It's that muscle memory of being able to do it. I see a lot of people that open up a brokerage account and think immediately they should be able to just go in the market and make money. Well, that's not the way it works. There's no business like that. I'll give you a great example. You guys know that I served this area here for a while as the economic developer for the whole county. And I went into a local business that had been here since I was a kid. I mean, been here forever. Jewelry company, okay? Been here forever. Wanted to sell his business because he wanted to retire. And he asked me, what do I have to do? What do we need to do? I said, well, let's take a look at your books. Let's see what the business is worth. Well, his books, when you open up his books, it looked like he'd barely made any money. And I said, what's going on here? That's when he finally admitted, well, somebody brings in a watch, it's $50. I just don't record. I just put the money in my pocket. Okay. I said, well, what you've done here is you've killed your opportunity to sell your business. On the books, this business doesn't make any money. He goes, yeah, but it does. I make good money. I said, sure. Prove that. How can you put a value on a business if you don't prove it? So even businesses that make good money, if you don't follow good business practices, are worthless. The business is worthless because it has no value. Okay? Any business model, you have to follow through with a set of rules. And I know a lot of folks have never been in business, and they kind of gloss over how a business operates and the importance of following through with a set of rules and a set of plans, okay? But every business has to follow a guideline if they're going to make money. They have a set of rules. They have a set of plans. They have paperwork that has to be done. They have to prove that this works. If you don't do that, you will not make money. It's all there is to it. So why should trading be any different than any other business? So if you need to paper trade to build your confidence in the pattern, that you can build that track record of saying, gosh, I paper trade this. And here's the fun thing about paper trading. I'm not worried about you making money in paper trading. What I want people to do in the paper trade is prove that pattern works. That enough times when you pull the trigger on that trade in that pattern pays. Okay? Not necessarily worried about you making a whole bunch of money or dealing with that. Take a trade that would be very similar to what you would do. This is how people screw up paper trading. They'll jump over here and say, "Well, they gave me $100,000 to paper trade, so I'm gonna make a $10,000 position here." Well, that's nothing you'd ever do in your real account. That's stupid. How can you prove anything if you trade way outside the bounds of ridiculousness of what you would actually do? Buy one contract, see if it works. But do that over and over and over and over and over. If 20 of those trades set up, trade 20 of them. Repeat that pattern. Manage that trade. Some of them are going to lose. Guarantee it. Some of them are going to lose. But can you manage that to a winning outcome? Winning more trades than you lost. And if you can do that and build the confidence in the pattern, don't worry about the money. Build confidence in the pattern that you're identifying it, that you're going through the mechanics of setting up the trade, planning the position, putting the trade on, and managing that trade. If you can do that, then it's a lot easier switch to live trading. You still have to deal with the emotional part. Okay? But the emotional part helps a lot if you have confidence in the pattern that you're trading, the processes, the muscle memory of doing it. It's a lot easier if you go through that process. Mike paper traded for almost a year. Now, I'm not suggesting you guys have to do that or some of you don't need to do that at all. But if you have no confidence, if you're constantly afraid, okay, if that fear is always there, what that tells me is you have very little plan in your trading. I can almost point exactly to what's going on. You're not planning your trades. You're not considering the risk when you enter the positions. And you don't have any goal or process to follow through on that trade. I see it every day when I coach. Man, I'm struggling. I've been struggling. I can't make any money at this. Well, let's talk about your trading plan. What are you trying to do here? And we find out they've got no plan. Zero. Nothing. They've given lip service to the idea, but they've never followed through. How can any business survive without a plan? And make no mistake, trading is a business. Formalize it yourself. Call it Jerry G's business plan, or Jerry's financial. I just picking on you, Jerry, because you're the last one that posted there. Jerry's financial. This is how I'm going to run Jerry's financial. Serious, guys, that'll make a huge difference in your trading. Massive. Step up, fess up when you're screwing things up. Don't make massive changes. You guys know the patterns. You know the trade. You know the setups now. Okay? Now just follow through and practice and keep repeating that over and over and over. Evaluate those losing trades and find out where you messed up. You know, Rick mentioned the other day when he was sick, he says one of his rules is when he's really sick, he doesn't trade. Very smart. When you're not well, when something has happened, you know, you've had a fight with your spouse. You're mad about something. Your neighbor kicked your cat or something like that. You're not in the right frame of mind to make good business decisions. Okay? If you're constantly afraid, you're not in the right frame of mind to make good business decisions. So you got to work through that process. Does that make sense, guys? Here I have wandered on for about 2 hours. I didn't intend to do that. But this has been very much like just a coaching session for everyone. Step up to this, guys. It's worth doing. I know all of that mundane stuff. No one wants to do that mundane stuff, but that's what makes a business work. Step up to this, okay? And your trading will improve. Is it going to happen overnight? No. It's going to take work. It's going to take effort. It's going to take dedication. It's going to take repetitive action to keep doing the same thing over and over and over, grinding it out every single day, just like any job, any business. Dedicate yourself to it, learn that process, and just keep working to slightly alter or modify that to improve your results. Don't throw out everything and start over. Unless you're doing something like, you know, making your charts completely unreadable with a whole bunch of indicators. I'm not telling you can't use indicators. I'm telling you what you should do is get yourself to a naked chart. Start there. What is price doing? From there, if you need confirmation from indicators or whatever, no problem. I love this indicator here because it's so simple. It shows us very simply, should we be thinking long or should we be thinking short? It doesn't tell us when we should enter. It's telling us when we should be thinking long or when we should be thinking short. Hey, very cool, Steve. Yeah, I'd love to see that when you get that put together. If you're willing to share um, with other folks, that would be awesome. Awesome. You guys can't understand. I mean, how cool that is. If you had somebody, if you, Steve should charge for that because I'm sure he's got quite a bit of time into writing this program for TOS. You can't imagine how much value there is in having members here that can do those kind of things and are willing to share. Okay. So, before we end here, last thing I want to say is, guys, this room, Hit and Run Candlesticks, these are only as good as, only going to be good for you if you participate. Ask those questions. Share your trades. Share your results. We want to celebrate with you when you win. I am never jealous. I don't care if I enter a trade, the same trade, and you made 50% on it and I made 10. I want to celebrate your success. Okay? That makes no difference to me. What I'd love to do is I'd love to see more people share their entries. This is where I got into this trade. And you know why I want that? Not because I want you giving away what you're doing or anything like that. And it's not because I don't want you opening yourself up for criticism, people jumping on you. By the way, if somebody jumps on another trader in here because they share something like that, I will shut you off. We are a group of folks working to help each other improve as traders. If you play that game, you're done. Okay? We're here to help each other improve. We want to support each other. We want to be encouraging to each other in your trading. So share that information, and here's why I want you to do that. Because when you share a trade with the public like that, you're making yourself accountable. Right? If you put that out there for everyone to see, you're now accountable to that trade. And that's not to put pressure on you or anything like that. What it's going to do is when you post something like that, you're going to verify. You're going to be really careful, right? You're going to verify, you know what? This is a really good trade. I think I'm going to enter this position here and I'm willing to share that. It's accountability. That will make you a better trader. So the more you participate, the more you share. And by the way, everyone, I mean, I know there's brand new traders in here that feel like I'd love to share, but I just don't have enough, knowledge to share. That's okay. Okay. You're not forced to share. I'm just saying the more you participate, the more you get involved here, the better it's going to be. But if I catch one person in here bad-mouthing somebody because they shared a trade that you don't agree with, you're gone. Because you have no idea about what their risk tolerance is, how they might set up a trade or anything. Their plan may be different than yours. It doesn't matter. If they put in a trade and share why they did it and feel justified in doing that, share it. Okay? Well, that's kind of what I'm doing here right now, Alfred, is to share that information. To share, because, everyone has a different process. All right? Some of them aren't right, and some of those folks that share, those will be losing trades. We know that. All right? We're big people here. If we make a decision to follow that trade or follow along, we better be able to have a plan that says this is a good trade for me. Because if you blindly follow someone's trade and you don't do that work, well, who's at fault? It's certainly not them. Okay, so don't get involved in that. Let's support each other. Let's be encouraging to each other. If I see something that I think is a major mistake, I will say something. Okay? And it's not to be mean. I'm trying to figure out maybe this really is their plan. But that's, I will mention, hey, you're taking a big risk here in my eyes. What's your plan here? And it's not to beat anybody up, it's to be helpful. I hate to see people lose money. Okay? This making sense? Be involved, because the more you are, the better this room becomes. The more you share, the better you become as a trader. You guys have always heard that statement. If you help someone else, if you teach someone else, you'll learn more yourself about the subject that you're teaching. If you help someone else, you will learn more about yourself and your trading. You'll be more conscious of what you're doing and be stricter to a set of rules. Okay? It will make you a better trader. Helping someone else will make you a better trader. Okay? And by sharing, you're helping other people. You don't necessarily have to call them out. Here's another thing I want to ask you guys to please do. People that are willing to share, okay, what happens in this room is they get inundated. Okay, they get inundated. They start receiving all kinds of PMs and all kinds of questions and all kinds of stuff. Don't do that, okay? It's okay to ask. If you have a question, ask them of it in the live room. Don't inundate them with a whole bunch of stuff. That distracts them from their trading, what's making them successful. Okay. So ask them in the live trading room. It's more helpful to folks if you ask them in the live trading room and they answer the question. Share. Does that make sense, guys? Don't make it a punishing thing to share information with folks. Okay? Don't make it punishing. Let's work together. Let's be stronger as traders. Let's be kind to each other. Not too much to ask. If you disagree with someone's trade, fine, disagree with it. That's not a trade I would make. But let them trade their plan. Don't beat them up. Okay? Make sense? $89% winners in January. Congratulations, Sean. That's awesome. That's awesome. That's the participation. That's the getting in there. That's the share. Now, I don't want everybody jumping over. Well, Sean, what did you do? What indicator did you use? What scans are you running? Don't do that to him. He was willing to share his success. Let's celebrate that with him, and let's leave it at that. You know, Dan D mentioned that he doubled his monthly goal this month. Awesome. Let's not hit him up with a whole bunch of stuff that's going to distract him or take a whole bunch of his time away from his work. Okay. Thanks, guys. I appreciate that. And thank you, Sean. You did the work. Okay. Sean's the new Mike. There you go. Sean's the new Mike. Bob C's the new Mike. Dan D's the new Mike. We've got a lot of success in here right now. So let's keep that success going by working with each other, helping each other, encouraging each other, and continuing to work to always improve ourselves as traders. All right? Everyone, I want to wish you all a fantastic day. Sorry this went on for 2 hours. Jeez, I can't believe it went on for 2 hours. I'll get this rendered and up on the website, hopefully, by Monday or something. Okay? Yeah, Blizzard time. That's right. You guys are very welcome. You're very welcome. So take care of yourselves. Have a great Saturday. we'll talk to you all here very soon.